Something unprecedented just happened in the gold and silver markets. And I need you to understand this because fortunes are being made right now, while others are being quietly wiped out. The question isn't whether this changes everything. The question is whether you're positioned on the right side when it does. If you've been around long enough to remember when a handshake meant something, then you know the value of seeing what's coming before the crowd catches on. Hit that subscribe button, because what I'm about to show you won't be covered anywhere else. And drop a comment telling me where you're watching from, because geography matters more in this story than you might think. Let me tell you what happened in January 2026. The markets didn't just move, they broke. They broke in a way that's never happened before in the entire history of precious metals trading. It started quietly over a weekend. The Shanghai Gold Exchange, one of the most powerful gold markets on the planet, was closed for a normal weekend. But while Shanghai was dark, something happened on the other side of the world. Gold and silver prices crashed hard. The kind of crash that fills news channels for hours. The kind that makes even seasoned traders ask, what the hell just happened? Here's where it gets interesting. When Shanghai opened Monday morning, prices there didn't follow the Western crash. They stayed high. Gold was trading at over $5,140 per ounce in China. Silver was over $136. But in London, in the COMEX markets in New York, gold had dropped to around $4,200. Silver had fallen to $91.60. Two completely different prices, same metal, same moment in time. This had never happened before, not like this. A massive spread had formed between what gold and silver were worth in the East versus the West. This wasn't a small discrepancy you could explain away. This was a fracture, a crack in the global precious metals system, revealing something far bigger happening underneath. The Shanghai Gold Exchange isn't some minor player. When that platform shows a price dramatically different from London or New York, it means one thing clearly. The East and West are no longer on the same page. They're reading completely different books. Analysts watching this didn't call it coincidence. They called it what it was, a fundamental break in how the global gold market functions. Here's what made it even more significant. The Chinese weren't just watching these higher prices, they were buying aggressively. On JD.com, one of China's biggest e-commerce platforms, gold bars were being purchased at prices significantly higher than what American buyers would pay for the exact same metal. And people were still buying, not hesitating, buying immediately. This wasn't panic buying driven by fear. This was intentional, calculated accumulation. In Shenzhen, one of China's most economically powerful cities, gold shops were packed. People were buying gold and silver jewelry, bars, coins at Shanghai exchange prices. But here's the part that should make you pause. When those shops bought gold back from customers, they paid the global price, the lower Western price. Shops were selling high and buying low, and customers were still saying yes. Why would someone pay more for gold when they know it's cheaper elsewhere? The answer is trust. In China, India, Japan, Korea, Singapore, gold and silver aren't just investments. They're safety. They're real money that governments can't print, that can't be erased with a keystroke. These countries have understood this for generations, and in January 2026, that understanding became action on a massive scale. While the West watched the crash in panic, China was doing something very different. China was buying. Not loudly, not dramatically, quietly, carefully, consistently. This wasn't a sudden decision. This was a strategy that had been building for years. And by January, it had reached a point where even people ignoring it could no longer look away. Picture an ordinary street in Shenzhen. Not a financial district, just a normal street with small shops. Inside, ordinary people were walking in. Young couples, older men, women with shopping bags. They weren't browsing. They came to buy gold bars, silver pieces, pure metal jewelry. They handed over money, took their gold, and walked out. One after another, hour after hour, day after day. This wasn't panic. Panic is loud and desperate. What was happening in China was confidence. A people who had decided quietly that gold and silver weren't just something to trade, they were something to hold forever. In China, gold isn't just metal on a spreadsheet. It's part of identity. For hundreds of years, the Chinese understood one truth. Paper can burn, banks can fail, governments can lie, but gold remains. This understanding isn't limited to China. India shares the same belief. Gold is woven so deeply into Indian culture, it's part of weddings, festivals, family traditions. Japan, Korea, Singapore all understood it. These nations spanning thousands of miles shared one thing. They trusted gold and silver more than any piece of paper. The numbers told the story. On JD.com, gold bars were being purchased at over $5,200 per ounce. Buyers weren't hesitating. They saw the price and clicked buy, because to them, ownership was the point. And here's what Western business people missed. It wasn't just big investors. It was everyone. Middle-class families, young professionals, people saving for the future, all moving in the same direction at once. But here's the truly significant part. People buying gold in China weren't buying to sell later at higher prices. They weren't playing a trading game. They were buying gold to keep it, to hold it, to put it in their homes, to pass to their children. This kind of buying doesn't create headlines. It simply disappears into homes and families. And once gold leaves the market that way, it doesn't come back. This made the situation dangerous for Western traders used to gold moving back and forth. But China wasn't playing that game. China was removing gold from the game entirely, piece by piece, ounce by ounce. And silver was becoming the most dangerous piece on the board. China's demand for silver had exploded. Prices in Shanghai were running at levels that made Western prices look like discount sales. $136 per ounce in Shanghai, $91 in the West. The gap was growing. This created an opportunity called arbitrage. When the same thing sells for two different prices in two places simultaneously, someone will profit. Buy cheap, sell expensive. It's math. Silver in New York was $91.60 per ounce. Silver in Shanghai was over $136. That's a canyon of opportunity. Traders who saw it moved fast. They bought silver in COMEX markets where prices were low, shipped it thousands of miles to Shanghai, where buyers paid far more for the exact same metal. Think about what that means. Silver was physically leaving Western markets in large amounts. Containers, shipments, tons moving east. Every ounce that left was one less available in the West. Imagine a town with one well. Everyone drinks from it. Now imagine someone fills trucks with water daily, driving it to another town, paying 10 times more. At first, nobody notices, but slowly the well empties. And when it does, people who stayed behind pay much more for what used to be abundant. That's what was happening to silver in the West. The traders running this knew the risks. Shipping precious metals is expensive and dangerous. But the profit was so large, risk didn't matter. They were making fortunes quietly while others argued about why prices crashed. And not everyone was winning. People losing were those not paying attention. Ordinary investors who saw the crash and panicked, selling at the lowest price, handing their metal to someone else at the exact moment it was worth least. And those buyers shipped it to Shanghai and made the money that should have been theirs. But something deeper was happening, called backwardation. When the price of metal today is higher than the price for future delivery. Normally, future prices are higher because storage costs money. But when backwardation appears, people want metal now, not later, and they'll pay more for immediate delivery. In January 2026, backwardation appeared in both gold and silver. For anyone who understood that signal, it wasn't a warning, it was an alarm. Chinese dealers understood this perfectly. They'd sell gold and silver at Shanghai prices, the high prices. But when customers wanted to sell back, dealers bought at global prices, the low Western prices. Buy low, sell high, the oldest game. And it worked because demand was so powerful customers didn't care. They weren't buying to sell, they were buying to own. The storm continued. Silver moving east, gold moving east, money moving east. The gap between worlds growing wider. And people in the West who thought they understood gold and silver markets were realizing they understood nothing. For decades, the West controlled the story. London set prices, New York confirmed them, the world followed. But something had been changing underneath. Shanghai was no longer just a market, it was becoming the center. The Shanghai Gold Exchange had quietly grown into something the West underestimated. They weren't followers anymore, they were leaders. And leaders don't wait for permission, they move first. For years, London traders would wake up and look at gold prices set by their market. But they began noticing something strange. Shanghai prices were moving before London, not after, before. As if Shanghai stopped caring what London thought, as if London was now watching Shanghai. This was the tipping point. Dubai became critical in this shift. Dubai wasn't just a market, it was a bridge between Shanghai and London, between East and West. Gold flowed through Dubai in unprecedented volumes. Traders from both sides met there. Dubai was where Old World and New World sat at the same table. And for the first time, the East wasn't sitting quietly in the corner. The East was at the head of the table. But here's an unexpected turn. This shift was also happening within the United States. For a long time, gold and silver were treated as just another investment, something for portfolios. But certain people remembered something older. The United States Constitution stated very clearly that no state shall make anything but gold and silver a tender in payment of debts. That law had been forgotten, buried under modern banking and central bank power. But in 2026, someone started remembering. Florida announced it would recognize gold and silver as legal monetary instruments, not just investments, as money, real money. In Florida, people could use gold and silver to pay for things, to settle debts, not through stock exchanges, simply by using the metal itself. This wasn't a minor footnote. This was a crack in the foundation. If one state could do it, others could follow. Connect the dots. The East was buying massively. Shanghai was becoming the price setter. Dubai was the bridge. And inside America, states were treating gold and silver as money again. These weren't separate stories. They were parts of the same story, a world moving back to something ancient, something real, something no government can print. The West has a choice. Keep ignoring what's happening. Pretend London and New York still control the narrative. Or wake up and recognize the ground has shifted. Traders who understood this didn't panic. They repositioned. They looked at the new map, understood the new rules, and prepared for a world where gold and silver prices would no longer be decided in London, but in Shanghai. This isn't prediction. This is happening right now. While most are still waking up to it, those who saw it first are already 3 steps ahead. So here's the question you need to answer. Not what's happening, that's clear. The question is simpler and more urgent. What are you going to do about it? The tipping point has arrived. The East and West are no longer playing the same game. Gold and silver are becoming the center of a new financial world, being built not by governments or banks, but by people themselves. And what happens next will change everything. Not tomorrow, not next year, now.